Good morning. This is Larry McMillan with the stock market update on Monday, February 26th. So the S&P continues to make new highs. Last week, it gapped higher strongly on Thursday after NVIDIA reported another positive earnings period. And the S&P has now made a closing all-time high on 13 of the last 25 trading days. That's pretty impressive. And that's a lot of upside momentum. So as a result, we're still maintaining our core bullish position. There is a gap on the chart left after that NVIDIA news last week. I don't know if all the gaps are filled. It used to be all gaps on the S&P chart were filled. But then last November, when we broke out to the upside, there were 4 gaps that were never filled. So this move has been very strong, more than 1,000 points since that late October, early November time period. And eventually there will be a correction. We expect to see some of our indicators giving sell signals prior to or coincident with that correction. So far, that hasn't happened. The S&P chart remains positive. We don't have a McMillan volatility band sell signal. What we do have is technically equity-only put-call ratio sell signals. And by technically, I mean that the computer analysis programs that we use on those charts is saying that they're going to roll over and begin to rise. That's part of a reversion to the mean sort of logic there. It hasn't happened yet. So while the computer analysis programs may be saying that, the ratios themselves are not really rising. They're kind of just moving sideways. If they were to begin to rise from here, that would be bearish, and they are in overbought territory, meaning the market is overbought. Breadth has struggled to maintain a positive attitude, but it has done so just barely. And so even the breadth oscillators, which would probably be one of the first indicators to generate a sell signal, even that remains positive at this time. New highs versus new lows, that's being totally dominated by new highs on the New York Stock Exchange. And so we're seeing that indicator, which turned bullish back in January, continue to remain bullish. And it was bullish most of last year as well. The VIX has gone back down towards 14. That has some ramifications as well. We're in the midst of a spike peak buy signal, which occurred when VIX spiked up after the CPI report last month, and then spiked back down again. And also VIX is below its 200-day moving average again, which is positive for stocks in general. So as long as VIX is down at these low levels, the stock market can continue to rise. It's not a problem for stocks with VIX being low. It's the problem comes when VIX begins to rise strongly. So all in all, it's a pretty positive set of indicators. We don't really have any sell signals except potentially the equity-only sell signal and the put-call ratios, and that's even somewhat questionable right now. But if we do get those sell signals, we will be trading them, against our core position or around our core position. Meanwhile, I invite you to visit our website, take a look at our daily letters. If you want to keep up to this with these indicators on a more timely basis. And meanwhile, have a great week trading.